Let's talk about the best thing about running a business, which is profits, making profits. Now, for years, I didn't even acknowledge this concept, which is basically why all the money that I made, even though that I was making money, but all that money evaporated because I didn't realize what is profits and how to manage it. Okay, so first of all, I want you to understand the concept. Profit means more money beyond your fixed salary. So as we said earlier, you're going to separate your bank account and you're going to choose a fixed salary that's necessary for you to live, and you're going to move that to yourself. You're going to transfer that money to yourself every month or every week, whatever you choose. Profits are money beyond that money. Okay? Now, a lot of people think, oh, I mean, it sounds like a greedy thing to making profits and charging more. And how do I even think about this? Or why should I even get it? Or I can barely pay myself. How are you even talking to me about, profits? Now, I want you to understand why this concept is important. Okay, basically, if you're freelancing, you're basically starting a business, which is something is very risky. Okay, you're taking a risk. The safer thing would be to just get a job and know that you're going to be making money for sure next month and all of that stuff. But you've started the business, which means you took risk, and profits is basically your payment for taking that risk. So it's kind of a reward, but it's also how you use that money to mitigate the risks, to make sure that your risk is lower. Okay, so basically there's two goals for the profit. One, you're going to save it, okay, for a rainy day, for in time of crisis, or you're going to invest in your business, but you're going to build some kind of a buffer, which means that even if things are not going as good, or there's a global pandemic, or clients are evaporating, you still have money to keep paying yourself the salary that's necessary for you to live. The second thing is it's bonus for you, and you can buy stuff and you can enjoy it and you can celebrate running a successful business. Okay, so here's basically how your cash flow should look like right now, assuming that you're still not doing more than 250K. Usually, for small businesses or freelancer, it looks something like this. You're going to probably take for yourself as a salary about 50% of what you're going to make, and 30% is going to be expenses, maybe equipment, maybe paying rent, maybe delegating some work, subcontractors, services, subscription, all that kind of stuff should amount to about 30%. You'll need to pay tax depending on where you live. It's usually something around 15% for smaller businesses making less than 250K. And that should leave you, if you do everything according to this, with something like 5% profit. This is basically the breakdown for a good, healthy business, okay? And this is the source for this breakdown is from the book Profits First by research that was done by Mike Michalowicz. I would recommend you reading that book later on. But basically, this is what you should be aiming for, okay? So if you don't do this, if you don't make sure that you take out this 5% of profit, trust me, there will be no profits left, okay? What most businesses do is that they're saying, okay, let me make money and let me pay all my expenses, and if there's something left, we'll take it as a profit, but nothing is left, because when you have money to work with, you're going to find something to spend it on. And so you need to actively manage the profits and exactly say how much profit you are aiming to make and pull that out actively. Okay, so the first step in managing it is to really assess where you are right now. Okay, so what is your fixed salary? At this point, you should already make a decision based on that. And to make sure that it's reasonable, you want to look at your year, on a yearly basis. If you've been freelancing for more than a year, you try to think about what were your 3 weakest months, okay? Because you want to understand, of course, and we saw this earlier, you're going to have ups and downs, and you don't want to calculate your salary based on your strongest months, okay? You want to make sure that you'll be able to pay even on a weak month. So think about that, take that into consideration. Obviously, you need to take into consideration what's necessary for you to live and decide on the salary that's necessary for you. Again, at this point, we're not at the what you want to make your ideal scenario. Right now is what is the money that's necessary for you to maintain the life that you live right now. Okay, this is not, well, I want to make $100,000 so that I can go on vacation and I can buy my own house and all of that. We're starting from where you are right now and what's necessary to keep you alive right now. Okay, then you can assess what other costs you have, subscription, rent, what other costs you have, and how much tax you pay. And you can basically see, based on that, how much of a percentage, on a yearly basis, if they would break down similar to the assessment that, I showed earlier. Do you take more than 50%? Do you spend your costs are less or more than 30%? You're paying more or less tax, something like this. You want to assess where you are compared to the breakdown that I just showed. Now, note that we are going to take the profits out of our cash flow. Okay, so we talked before about profits lost and we saw our profit rate over there, but that was basically kind of like theoretically. It doesn't mean that the cash is in the bank. Now, here's basically kind of the statement that we saw before, the cash flow statement. And what I'm actually going to do is I'm just going to add a line called profit, and I'm actually just going to decide that whenever I have revenue, I'm going to take, in this case, let's say it's 5%. Okay, so 5% out of 50 is 2.5. So I just add it as an expense, and I take it out in January and in March. In February, obviously, I'm not making anything, so I'm not taking profit when I didn't generate revenue. So at the end of this, basically at the end of this quarter, we took out basically $5 as a profit. Okay, and it does leave us with less cash in our bank, but we do have profits that we can take, we can save, and we can use them, and we do have cash that's still in there to keep the operating cash flow, the cash necessary for the business to run. Okay? Now, if you feel like that's too much to start budgeting and taking money right now, you don't have to start with 5%. You can start with even 1%, and you'll find out. I just want you to start building the habit of allocating money for profit and taking it out. And then you can go ahead and start increasing it. But it's a habit that you want to build to budget for profits and taking them out. Then you see that your business is profitable. And of course, you can make adjustment, whether it is reducing your expenses, but in general, you should see it as an expense that you have to take it out. Once you put your mind to it and make sure that you're actually doing it, you will do it, and that will basically turn your business into profit. Okay? Now, I suggest you take that money out of the account, okay? Once a month, when you have revenue and you've decided to allocate a certain percentage to profit, take it out, because you don't want to see it in your cash bottom line, because then you'll think, oh, that's cash that I have and I can use it to pay expenses or invest or buy something. So you probably want to take it out. Now, depending on how you set up your accounts, you can either move it to a third account, or I have the way that things are structured in my bank account, I can close it in kind of a saving account, and then I'm not going to see it and I don't have access to it. So every month I'm basically closing the profits in a saving account, so they're not visible to me and I'm not seeing them. So, out of touch, out of whatever. You understand what I mean. Now, basically, here's what I do with the profits. We split it into two, and then half of it we build a rainy day fund with. We're saving it inside the business, and half of the profits we take home as dividend and fund money for us. So that's how we treat our profits.